Hey, it's Soleil, and this is episode 209 of the Orange Pill Investor. And I'm going to go over some of the trades that I made earlier in the day. I generally like to make them on the recording, but I was a little busy and I had to move while Tesla was hot. So I caught this 234 rally, and I really needed it in both of my accounts, really. So I was stacking these long Tesla calls, mostly because pre-split, I couldn't afford MicroStrategy calls. And I had like a couple $100 in buying power. I mean, I was razor thin down here, kind of really pushing it to the limit. And so I sold one of these 800 strike for January. These are getting a little long in the tooth anyway. I won't be holding these past October. So win or lose, these were going to get sold off anyway because theta accelerates as you get to shorter date expirations. I don't like to hold any calls under 90 days. 60 is my absolute limit, but 90, I really start getting nervous and I really want to unload the damn thing. Being an option seller, I'm very sensitive to that because anytime something gets 60 days and under, that's when I start licking my chops. That's where my bread and butter is made. And, option sellers tend to print money under 45 days. So I definitely start getting nervous once these start to get a little too close for comfort. So I sold one of these, and I actually sold this one at a loss. I sold it for 55. Now, if you're wondering, why would I sell this at a loss? And it's a little something that I learned that, as far as I can tell, it makes sense from this penny stock trader that I used to watch. And I actually didn't watch any of his stock trades. I don't even know if he had stock videos, but that was back when I was a degenerate crypto shitcoin trader. And I would trade in and out of that stuff. And one of the things that he came up with was a strategy for selling alts while you built up a Bitcoin position. And I hear a lot of people talking about it, but this guy had a legit, pretty reasonable technique. I didn't even mean to talk about this, but he only purchased Bitcoin and or any of these alts. Like if he studied a chart and he felt like he knew it pretty well, he'd draw some support and resistance lines. And if an asset cracked below, what was it, like 20% below support, and it had to do it quickly, it couldn't just grind down, he would have his limit orders in, and then they would fill. And at some point they would hit the next lower support, and then they would, get a bounce. And so he'd be buying at the bottom of this crash, and then immediately he called it participating in the bounce, and he would just sell off a little bit for a quick 10-20% profit. And he would do that to accumulate Bitcoin while he kind of waited for Bitcoin to do the same thing, because it would take months sometimes for those events to happen in Bitcoin. And he basically was just like, look, I get bored. But his point was that you always participate in the bounce, and it doesn't matter what the bounce is. So in a week, this is a bounce. This $600 call option was 35. Boom, it went to 60. So it almost doubled. This is a huge bounce. It doesn't matter that I kind of already screwed the pooch on this and bought Tesla before it crashed. So it's too late to fix that. It's too late to unfuck that mistake. So if you have an asset and it's worth something, doesn't matter what your cost basis is. And it's not financial advice, but I'm just telling you what he said. he said that if you have something and it pumps, then you participate in that. You sell something. And I'm not saying he's 100% right, but in this case, it does make sense because I was able to sell one for 55 and it's 52. It would have been nice if I would have caught the very tippy top of this one. But I also have 3 of these farther out. They're not leaps, but long calls. And so my average cost on these is 130. And today it went from, at the open, it was 119. Boom, went to 174. So these actually turned a profit. So I sold 2 of these as well. And I had been dollar cost averaging into this. So the last one I bought was at 85, which brought my dollar cost average down to 130. So my goal here was to participate in the bounce. I had something that was more valuable. That one went up 30%. So I took advantage of that. And what did I sell them at? Yeah, $1.60. So I just about caught the top here. I must have sold them right around here or here. So I'm happy with that because it gave me a little bit of breathing room on this account. And it was the only reason I was even stacking Tesla. I just wanted something to be kind of a pairs trade against my Bitcoin derivatives. I wanted something that could move independently against my other positions so that I could rebalance my portfolio or just take some profits in Tesla, move it over to, a Bitcoin derivative. And and I had sold a new Riot put here, which burnt like the last $650 of my buying power. So, I was like, had razor thin buying power here. So I was more than happy to take some profits and even sell this one at a very small loss. Because relative to its most recent price, it was actually up. I lost like 10 cents on it or something, $10. But it was worth more than it was at 9:30 this morning before the open. So did something similar in Tesla in the main account. I had 300 shares. So I went ahead and closed 2 of these. So I sold the shares at like 236. And I think, so that means that these probably cost me $1,900 a piece. When the blows pressure strikes this far, this 90 delta here is basically acting like a synthetic stock. So closing a covered call along with 100 shares is almost identically the same as just letting them get called away at the end of the week. Since this is, 0.9 delta on this option, I only lost $10 on that trade by doing it now. And it freed up, like if I was going to close this right now, it freed up twice $6,000. So it cleared up like 12 grand of buying power, which I was more than happy to turn around and take that buying power and sell a put in MicroStrategy for just a single day and collect $289. So that's like 2% for, I guess, all day Thursday and all day Friday. So 2% for 2 days. That's 1% a day. I'll take that any day of the week. And if this does stay below 125 and gets assigned tomorrow or over the weekend, then that will be fine because I usually try to pick up 100 shares every week anyway. And that would just lower my cost basis from 143 to, whatever, another dollar. I have 2,200 shares, so, dollar cost averaging in another 100 shares isn't really going to knock this down too much. Maybe a couple of bucks. So again, that Tesla is serving two purposes here. It's kind of like it's something that I'm hoping will act independently of MicroStrategy, and I can trade out of whichever one is up into the whichever one is down. And it's also to satisfy a little bit of Tasty Trade's concentration risk algorithm. I've tried to add MicroStrategy positions before when I owned nothing but MicroStrategy in this account. And it was like, nah, dog, your concentration risk is too high. And it just threw an error. It wouldn't let me buy anymore. Even though my buying power said I had enough. It was like, nah, you're a little undiversified here, son. So Tesla's kind of just serving as a an algorithm smoke and mirror, smoke screen. I think that's the word I was looking for. So yeah, I peeled off 200 shares of Tesla at 236, and I closed these for look and see. Closed these for. Oh, I closed them together. So anyway, I got a 20 grand credit. And then immediately, I kept a little bit of that buying power because this makes me a little bit nervous. But I took half that buying power and sold a put. And while I'm at it, actually, while MicroStrategy is still down, I can probably take this $289 that I got paid, and I might as well add a long call position. Look at that. So I got paid $289. I'll take that premium and go longer. Phil, thank you. All right, let's see if that's all the moves I needed to make today. The IRA has nothing but MicroStrategy in it. The joint account, CLSK getting wrecked, MicroStrategy getting wrecked. Yeah, this 144 put will get assigned, so I'll be selling covered calls in this account on Monday. But while this is down, I wonder if I should pick up a long call here as well. They always want to milk me for a couple of dollars. All right, there we go. All right, added some cheap leveraged positions while MicroStrategy is kind of on a discount. Just double check the 5K account. All right, so there's some premium to collect here overnight. Here. These are like all the way out. I had to roll these to 45 days to collect, so I won't even have to deal with these for a couple of weeks. I could see my MicroStrategy long calls that I have here. Average cost is 370. So if I I sell both of my shares, that would give me 240 to play with. I could buy one more. Let's do that. Sell 2 shares. That gives me 240 buying power. I should be able to afford one long call. Of course, they're going to milk me for a couple of bucks here. So I'll go to let's try 230. $232. You rat bastard. You're going to make me go to 235. Phil, you dirty dog. I just want to get on with my life. They know I'm going to go a little higher. I think they can already read our minds. What did I even go to? So I go to 237. There we go. Okay, insta-fill. Yeah, go fuck yourself. All right, so what did I lower my cost basis down to on these 380 calls? Down to 337. So still a little sort of like underwater, like 30% on these bad boys. And then these are February, so I would hold them no later than December, January, February. Yeah. All right. I think that's it for now. Be good, y'all.